There's a potential that we reduce tariffs on Brazil. There's a potential that we reopen the border to Mexico. Good afternoon, everyone. Welcome back to the CommStock channel. I am Relph with CommStock Investments. Missed you last Friday afternoon, didn't have a voice, so we'll give this a shot as I'm still struggling to keep it throughout the end of the day. But as we come into the end of trade on Friday, the 7th of November, taking a look quickly at what things are looking like in the last 15, 20 minutes of grain trade, we have seen settlements in the livestock, but we're going to take a look more focused on the broader term charts for both live and feeder cattle, as I've been getting a lot of questions about where can this thing go and where might the bottom be. Obviously, this big fall off has people questioning that and whether or not it should be time to step in and buy. We'll take a look at some short-term and long-term charts for both live and feeder cattle after we run through a few of the finishes here today. It looks like December corn is going to wrap up somewhere in the upper 20s, currently trading down a penny and a quarter at 427.5. Bottom end of the day's range, sitting right on the low right now, and that is the lowest close we have seen. As long as it holds out here to the finish, that would be the lowest close we've seen since the 24th. So about 2 weeks of trading since we've seen this kind of close. We do have some moving average support. We have last week's low as support as well, that at 426.5. So we could catch some footing here nearby. However, I do think this might be steered by the soybean trade and what goes on in the headlines regarding a China trade deal. We have to keep in mind there's still a huge chart gap that doesn't fill until 1063. I've been talking about that to my subscriber only morning videos for the last couple of days. Chart gap for the January contract sits between 1070 and 1063. So still a potential of a 50-cent sell-off here, and China is broadly absent from the market at this point, even though they have promised these purchases. According to U.S. officials, they are actively shopping Brazilian soybeans for January delivery. That doesn't bode well for our prospects moving through the short term here anyway. Soybean oil is up 37 points at 49.72. The meal up $4 today after a big correction lower yesterday. The meal chart not looking real pretty here. That was a huge drop off a cliff yesterday. Although the little rebound today, we'll see if we get any follow through to start next week. But as you can see, the meal was up for 14 straight sessions before any kind of a correction started to take place. So it definitely got overheated. RSI, stochastics, both at very elevated levels before we saw that sideways correction that led into that fall off yesterday. Wheat is struggling here to finish the week. Chicago wheat down about 8 cents, while the KC is down anywhere from 3 to 5. So a corrective pullback there after a pretty accelerated move as well. December Kansas City rallied approximately 60 cents before we started to see this pullback. Now we have pulled back over 20 already, but there is still some chart gaps in the wheat as well. In the case of the KC, that would not fill until 504.5. Still the potential of about 15 cents of weakness, and the setup pretty similar in the Chicago. But the main focal point I wanted to bring up today is the cattle. Again, getting a lot of questions. We are higher today. We had a nice finish to the session. Taking a look at some long and short-term charts here. As I pull up the January feeder cattle daily chart, I'm going to switch over and show you a different perspective here. So this is a January feeder cattle daily chart, and I've put up a retracement from the April 7th low, which was at 266.07, to the contract high. And we did get very close to a 62% retracement. I would say that that's close enough to call it a test. Before traders were cheating orders near that retracement level, we got down to 311.5, that retracement closer to 310, but get all the way down there yesterday on a jab and then rebound to finish the day, seeing some follow through here. In addition to that, we did have a breakaway gap when this decline started on October 17th. Then we had what we would call a midway gap or a measuring gap in the middle there, and that's obvious to the naked eye. And then to start yesterday's trade, we had what we'll often refer to as an exhaustion gap, when maybe you've run out of selling energy. And we saw that to be the case yesterday. We saw the significant drop off right at the open and then rebound and finish mid-session, finish the day around middle of the range, and then follow through to the upside today. So that kind of proves the point that that was probably an exhaustion gap to start the trade yesterday. If we can compound on this gain and see some movement upward, that would prove that point. But that retracement level is significant, right around 310 for the short term. Now, longer term, it turns into a very different picture here. This is a monthly feeder cattle continuation chart, and I pulled a trend line off of the COVID low. It's a multi-point trend line, very valid to think that that's a reasonable technical marker here, but it's way down below the market. All we've done so far, also from that COVID low to the all-time high to start last month, we've come down to the 23% retracement. That is not normally one that will hold a market. You want to see a 38 to even a 62. The 50 is very significant in the middle there as well. So from a retracement, trend line, all of that standpoint, we haven't really done anything. Again, short term, maybe we've satisfied our short-term needs and we'll see a rebound before we go back down. Fundamentally, the herd size remains the same. Cattle industry participants remain fairly optimistic about what the next couple of years look like. And as long as that's the case, I think there's going to be some underpinning support until that market sentiment starts to fade even further. So moving away from the feeder cattle, I'm going to move over to the December live cattle. This is a daily chart. And I did put a trend line from the April low to some lows that were achieved in the June timeframe, even into early July. And you can see here, we broke that down kind of with a vengeance. But during that big expanded limit day down, we finished off of limit. We went sideways for about a week, then saw another leg down. We have achieved the 50% retracement of that total move. So that's significant here. And maybe that's going to be enough to hold us. As you look at the stochastic, still down below 10, trying to hook higher. The oscillators tell us that there's definitely buyers. This is definitely a buyer's market for the short term. Whether or not the money flow within the market cooperates with that remains to be seen. But this is something that we could look forward to, at least for a short-term reprieve. But when we look at the broader picture, things definitely look a little bit different. This is the live cattle continuation chart. Other than this 1 month where we probed this trend line and finished back above it, this is a very defined, perfect 45-degree uphill trend line that we have not yet achieved. So when could we achieve that? Well, if it's this month, we've got to get all the way down to the 206, 207 area, which would coincide with the 23% retracement of this entire move from the COVID low. So that would be a major target to look for, and really not all that far away when you look at the big picture. But again, from a short-term standpoint, maybe we've done all the damage we can do for now, and we'll get a rally back before we see a continued slide lower, if that's where we're ultimately headed. So just wanted to broaden the picture a little bit, bring some perspective. Obviously, there's a lot of headline things that are influencing this. There's a potential that we reduce tariffs on Brazil. There's a potential that we reopen the border to Mexico. Additional tariff reductions with other countries can make a difference in this whole situation as well. And the market is hyper focused on the headlines right now. Everything that Trump and Brooke Rollins have to say about beef or cattle is going to be scrutinized heavily and traded heavily as well, hence the volatility that we've seen of late. So hope you guys get something out of this material. If you have any questions, feel free to reach out to us. Otherwise, on behalf of producer Brianne Jenkins, I'm Eric Relph with CommStock Investments. We'll see you next time right here on the CommStock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.